Welcome back. So, how did Barton Company in our last example decide to use $3,000 as their estimate for bad debts? There are two methods that I will discuss during this presentation, the percent of sales method and the aging of accounts receivable method. There is a third method, the percentage of receivables method, but I have not seen it used frequently and will let you read about it on your own. The percent of sales method, also referred to as the income statement method or approach, is based on the idea that a certain percent of a company's credit sales for the period are uncollectible. The estimate at the end of the period is determined by taking the current period credit sales and multiplying by an established bad debt percentage. The bad debt percentage is determined based on past history of the company and current economic trends. Also, the sales transactions included in this computation are typically only the credit sales because, of course, there are not any collection issues to consider for cash transactions, right? So assume that Barton has credit sales of $1.4 million in the year 2013. Management estimates that 0.5%, that is 0.5% or 0.005, of credit sales will eventually prove to be uncollectible. How much do you calculate is Barton's bad debt expense for the year 2013? Pause this video for a moment to do the math. Were you correct? Barton's bad debt expense would be $7,000. This is determined by multiplying the credit sales of $1.4 million by 0.5%. The adjusting entry for the estimate will then be a debit to bad debt expense and a credit to the allowance for doubtful accounts, in the amount of $7,000, that is. This method uses an income statement focus because it uses sales to compute the expense amount and does not take into account that there is any previous balance already set up in the allowance for doubtful accounts. Remember, we must remove cash sales from our total sales revenue to arrive at net credit sales. We will not experience any bad debts on credit sales. The two accounts receivable methods, also referred to as the balance sheet methods, use the balance sheet accounts to estimate bad debts. They look at the relationship between accounts receivable and the allowance amount. Now, the goal of the bad debts adjusting entry for these methods is to make the allowance for doubtful accounts balance equal to the portion of accounts receivable that is estimated to be uncollectible. This is a little different than the other method. As I mentioned previously, the two balance sheet methods are known as the percent of accounts receivable and the aging of accounts receivable methods. We will focus on the aging method shown here because it is arguably the more accurate of the two. It focuses on how long it's been since a customer paid their bill. Under the aging method, we first estimate what we want the balance in the allowance for doubtful accounts to be. Then we adjust the ending balance in the allowance to the amount we just computed, and there are 3 steps that get us there. The aging of accounts receivable method uses both past and current receivables information to estimate the allowance amount. Specifically, each receivable is classified by how long it is past its due date. Classifications are often based on 30-day periods, as you'll see. After amounts are classified, or we call it aged, then estimates of uncollectible amounts are made, assuming that the longer an amount is past due, the more likely it is to be uncollectible. Experience is used to estimate the percent of each uncollectible class. These percents are applied to the amounts in each age category, then totaled to get the estimated balance of the allowance for doubtful accounts. Let's look at an example then. Make it real. This is an aging of accounts receivable that lists each customer's individual balances assigned to one of 5 classes based on its days past due. That means unpaid since the invoice date. Amounts are totaled so they may be evaluated for materiality. And you can see that $3,100 of the total of $100,000 in receivables has been unpaid for more than 90 days. Which of these categories has the highest risk of being uncollectible? Well, you're right. It's the amounts past due for more than 90 days. After the amounts are totaled, management estimates what percentage of the account is uncollectible. The totals for each age group are then multiplied by the estimated percentage of uncollectible accounts for each classification. The percentages used are regularly reviewed to reflect changes in the company and in the economy. Barton has estimated that 60% of the amounts over 90 days past due are uncollectible. Now, I've worked in companies before where we regularly assume that 100% of amounts over 90 days were never going to be received. The point is, these percentages are developed based on what the company has learned about its customers and the economy. So back to our example. The company estimates that $1,860 of the amounts over 90 days past due will not be collected. A similar analysis of each age category results in a final estimated balance for the allowance for doubtful accounts of $5,320. But wait, we're not ready to make the journal entry just yet. This computation simply provides the company with an ending balance desired in the allowance for doubtful accounts. Remember, because the allowance for doubtful accounts is a permanent account, it will always have a balance in it. Remember that we don't close permanent accounts. As a result, when you determine the desired balance in this step, don't stop there. You aren't finished. There's another step. Next, have a look and see what the balance is already in the allowance for doubtful accounts and make the entry for the amount needed to arrive at this desired balance. Remember, there are 2 parts to this method. So let's look at the final step then, adjusting the balance in the allowance. Let's assume that Barton already has a $900 credit balance in the allowance for doubtful accounts. Now, if Barton wants the balance to be $5,320, how much must it record as an adjustment? What do you think? Pause the video and figure it out here for a moment. The solution is found by comparing the unadjusted balance in the account with the desired amount. In this case, if the adjustment to bring the allowance to the correct balance would be a credit of $4,420. The adjusting entry would be to debit bad debt expense and credit allowance for doubtful accounts for $4,420. A note of caution. If the allowance has a debit balance, and debit balances occasionally happen, you must add the debit balance to the desired balance to get the amount of the adjustment. An analogy is imagining a number line with 0 in the middle and debits to the left of 0 and credits to the right of 0. To get from the left side to the right side, you must add the number on the left to the number on the right. I hope this makes sense. See you shortly in the next video about writing off and recovering bad debts.